Elements Funds launched its first ETF, zeroing in on the EV and energy storage markets. The fund will buy and sell futures of commodities such as lithium, cobalt, nickel, and copper, all metals necessary for EV technology. Element Funds co-founder and CEO Will McDonough joins us now. Well, good to have you on the show. So by focusing on the futures elements here, what does that mean in terms of avoiding some of the risk and the volatility that we have been seeing with the EV market?
Yeah, what we've chosen to do is give people a more direct exposure to the elements necessary for the future of battery technology, whether it be through solar, wind, or EV. As we've seen and as is broadly covered, Tesla, but, all of these EV companies have had a trying Q4 because they're trading at weird multiples that the market doesn't really know how to digest. And so, when you think about Tesla trading at a 1.2 trillion market cap, we think that a lot of that demand was for investors not knowing how to play EV and wanting to participate in the adoption of EV. But they ended up the year down almost 70% when core assets for building Teslas like lithium was up 180%. So there was almost $1.2 trillion worth of investors who thought they were long EV adoption and ended up exposed to Musk dumping shares and Shanghai shutdowns and external factors that really had nothing to do with, whether or not quarter over quarter there's EV adoption or not.
So then what does this mean in terms of return on investment in a fund like this?
We, come from private equity background, so we expect to deliver private equity-like returns with equity-like liquidity. We think that these assets are wildly underpriced, and we think that the market demand for them has not been figured out yet. If you look at global governments with, carbon neutral targets that they've made in the coming 5, 10, 15 years, the amount of adoption that is going to need to be for that to even come close is going to drive demand to these core elements necessary to build these batteries that our infrastructure isn't established yet to provide. So when you talk about some of these mining companies that we depend on to deliver these assets, if I found lithium under my house today, it would take 8 to 12 years before I could get that into a battery. And the markets that we depend on for these assets are majority China, a lot of Democratic Republic of Congo, some, Brazil and Chile and Latin American countries with governments that aren't democracies. And as we saw with, some big news last week and over the course of the last month, one of the world's largest copper mines in Panama was shut down because the Panamanian government said, we need a massive base tax to allow you to operate. These are just markets that, our supply chains are dependent on that introduce a lot of risks to the price volatility of these core elements and metals.
So then when you're deciding, given those risks then, when you're deciding what's going into this ETF, what are some of the criteria that you're using?
We have a great team of folks that really own these core assets up and down the supply chain in partnership with the Energy Mineral Group out of Houston, a $13 billion private equity shop. And what we do is we look at per car company and per implementation of battery technology, what are global kind of quarterly and annual targets for cars delivered. So if Tesla's going to deliver 3 million cars and Tesla's using an NCM 811 battery, that's 8 parts nickel, 1 part cobalt, 1 part manganese, that's a different battery than you're going to find in a Chevy Volt or even a Ford Lightning. And so what we try to do is look at the global universe of demand for batteries, the different types of battery technologies each of those use cases requires, and then what the resulting demand per asset are. So lithium, cobalt, and nickel are core to the majority of battery technologies today. Copper is not in the batteries themselves, but every electric vehicle requires almost a mile of copper wire per car. So the global demand for copper to connect these batteries to all of the sources and uses is massive as well. So we try to extrapolate all that data into a math equation that allows us to give investors real pure exposure to global demand for all of those underlying assets. And we are an actively managed fund, which means monthly we're going to reposition our portfolio to ensure that we're in tune with the times, and that as the price volatility comes and as appreciation rises, we'll be able to, redistribute redistribute into some of the underperforming assets. And then as battery technology matures, we're going to redistribute into the underlying assets that drive the demand and the ultimate optimal use of these battery technologies.
And as you've talked about, some of the mining for this, going from mining to get it into the cars, this is a multi-year process then. So what sort of time horizon should investors be expecting before they start to see some of the bigger returns on this?
Well, all of those long time horizons only drive shortages in supply. And when you have volatile and short supply and rising demand, regardless of the sector, that's undefeated for market price appreciation, which is why we brought this product to market. As I cited before, lithium was up 180% last year. Copper was up 2% last week. I mean, these assets are in massive demand and their supplies are in question. And so we don't think that investors are going to have to wait a long time for a return. I'll also say, traditionally, the only way to play these markets has been in the private equity sphere. And so the answer to your question, if I were a private equity professional, would be, I'll call you in 10 years and we'll return your money to you with a return. Whereas in these markets with these ETF products, we're able to offer investors daily returns, and they can trade us on a daily basis. So they can take a long view on the macro, but trade it with liquidity, which I think is the holy grail.
And certainly a way for people to get in and try and avoid some of the volatility, as we mentioned, between Musk and some of these other EV spaces as well. A big thank you to Element Funds co-founder and CEO Will McDonough. Thank you for joining me this morning.